Welcome to the study circle meet on GST updates. Recent updates in GST, I don't know what is recent because GST has update every day and it's a challenge to keep the update of those. So today we have a speaker, an expert on this matter. May I request our chairman Pramod Harekde to escort the speaker Hanish to the dais and greet him also. Welcome to you, Hanish. I request you to do the
Good evening, esteemed members. Welcome to the pivotal subject of recent updates on GST. Of course, I am not a GST practitioner. The line which I wanted to use, my secretary has already stolen. If you see, Bangalore branch does quite a lot of events on this GST update, and every time I term it as recent updates, recent updates. I think this has become a never-ending topic, and since the act is fairly new, I think we'll have to undergo recent updates in the next couple of years also. Yes. Yes. And today's topic is very essential because when we were deciding on the topic, what do we talk, what do we conduct on? I think Hanish was referring to input service providers, input service distribution rather. So there are a lot of complexities, there are a lot of rules, and how do we tackle them in our daily professional life, and what are the opportunities we have also is what we will like to explore. I thank Hanish for taking up this topic, and even at your busy schedule you are coming back. Thank you once again. Without taking much of your time, let's start with this session. Before that, I would like the secretary to just give a brief introduction, and then we will get it started.
Thank you, Chairman. Hanish has more than 10 years experience in the field of indirect taxes and GST. He works closely with the clients engaged in complex businesses like pharma, real estate, and also new age businesses like startups, EV leasing companies, gaming companies, crypto companies, various GST matters. Hanish has to his credit as a speaker of various impactful platforms across India, ICI, ICSI, FKCCI, BCIC and other organizations. He heads the litigation practice and has represented the clients at various judicial forums, which includes the CESTAT, advanced ruling, etc. He is a partner in CNK, HSK and Associates. Hanish, welcome to you and thank you for accepting our invitation. Over to you.
Good evening, everyone. Actually, for once, when the topic was allotted to me, and in fact, I had only suggested that let's have a discussion on recent amendments. When I got the topic and I started doing research, frankly, I'll tell you there were no updates at all. Because GST Council meeting only has not happened, and for us, the updates come generally when the GST Council meetings are there, and that happened only, I think, in July or August, and based on that, lot of circulars were issued in the month of October, so 2003, 2004, 203, 204. And after that, there have been no changes as far as GST law is concerned, but there have been a lot of changes as far as portal is concerned, which we may not want to discuss in this August gathering. Okay, so what I have done is, though there are a lot of controversial topics which we can discuss about, but I have chosen a few of the topics which I believe we will be able to discuss only if I get some inputs from you. Otherwise, it may not be very interesting, and maybe in 45 minutes itself I will be able to finish it. So don't allow me to finish my topic within 45 minutes. If you can contribute a little in whatever way possible, then we will have a meaningful discussion. Otherwise, we may not have a meaningful discussion. We will only have some updates on case laws like we have in our WhatsApp group, which we think that someday we will read and we never read those updates. So like that only this session will also be. So let's not have that kind of a session where in that one group to be read, we keep dumping, and that to be read itself is never read. Correct? All of you have, at least I have that group, that one group with myself, where all the important updates are sent. thinking someday I will read, but that someday never comes. All of you have?
Yeah.
Nice, very nice. Right. So before we, start discussing about problems in GST, let's face a real problem which Bangalore is facing, and that is water. Correct? No. So let's address the issues on water. So maybe we will not be discussing about how to save water. From a GST perspective, what is the problem as far as water charges are concerned? Okay. So the issue here is, assuming I am a resident welfare association. Prestige Falcon City is there in the news, though generally we should avoid on the stage taking names, but it's there in the news, so we can use that name. Prestige Falcon City is in the news. Earlier it was in news because it was very close to a very huge mall and metro station, and now it is in news because it does not have water, and the water is being supplied through water tankers, right? So earlier the water tanker rate was say 800 rupees or 700 rupees, 750 rupees. Now it's come to 1500 to 2000 rupees depending on the area and depending on the negotiation skills. Okay. Now from a GST perspective, it takes us to a very typical issue. Okay. Packed water given to us is liable to GST. Okay. But unpacked water, if you look at the entry here, it says water is an entry under notification 1 of 2017. That means it is exempt. Okay. Other than mineral water or demineralized water sold in sealed containers. So if it is sold in sealed containers, it is taxable. If it is not sold in sealed containers, that means we are getting water from the water tankers, it is exempt from tax. Okay. So now the RWA calls one person, he supplies some 10 tankers of water and charges it 2000 to 20,000 rupees. At the end of the day, RWA is going to collect that money from the residents of the apartment only, right? So 20,000 rupees divided by the total square feet multiplied by the square feet of your house or my house, that is the additional amount of money I am required to pay for the current month apart from the common electricity, landscape charges, etc. Okay. The question is very simple here, whether GST is applicable on these water charges collected by RWA for payment to water tanker contractors. What is your view? Like I said, everywhere you will have to give your answer, otherwise it is going to be, a very boring session.
So there might be reverse charge applicability from the amount which the RWA takes from the members.
RCM.
Yes, RCM.
So RCM who will pay?
RCM, the RWA will pay.
RWA is rendering service,
RWA,
no?
when it is collecting from the
Members.
members,
Forward charge, no?
but
If it is taxable, it will be forward charge, no? If members are asked to pay, that is RCM.
members might be, then it is collecting the charges from the members only, isn't it?
Correct.
Then on that
GST who has to pay? If it is applicable. So you are on the premise that GST is payable. I am sure there are people who are secretary in their RWA and they have said it is not taxable, so please don't charge tax. Or some treasurer will be there. All chartered account is only a treasurer in RWA. Correct? No? So they would have told their society not applicable. So I would like to listen to them as well. Is it taxable, not taxable?
Not
Taxable?
It is not taxable.
Not taxable? Sir, why not taxable?
It is not sold in the container or sealed.
It is sold, it is coming in the tap.
Yeah.
Correct? Whether dirty water or clean water, it is coming in the tap. So it is not sold in container, so it is exempt. Anything else? It should be exempt?
Yes.
Man said in. Why have you even discussed? It is exempt. Reason you are looking, ma'am. It's not in a sealed container, so same reason. Okay. Right. Anybody else has any other answer from as far as exemption is concerned?
Can it be a pure agent answer?
Pure agent. Okay.
Reimbursement, something like
Reimbursement of expenses. Then RW is pure agent for everything, no? Correct? They are incurring expenses on behalf of members only. They have set up, they have been incorporated by way of taking registration in Societies Act to incur expenses on behalf of members. So for everything they are pure. I'm sorry, pure agent only.
The water what is used, if it's consumed, it's not used for any commercial purpose.
Sorry, I didn't get you.
The water which is consumed is not used for any commercial purpose.
Not used for commercial purpose. Nothing will be used for commercial purposes in RWA. Name itself is residential welfare. So for residents only, nothing for commercial.
It's a basic necessity.
So that means everything exempt. Clear? Anything what RWA does.
Water.
Only because it is run by the members only. So never it will have profit in P&L account. It will only have interest from bank FDs, which will reduce the amount which is to be recovered from the members. Or it will have some medicine store which is there given on rent. That will also be reduced from the total maintenance to be collected from the members. It will never have profit. It will be zero only. Sir, sorry sir, you had said it is taxable. Why sir?
It is taxable because it is collected as in the form of service, not as a water only. RW is
What he is saying is RW is not selling water. Correct, no? This notification 1 of 2017 comes into picture only when, sorry, this should have been 2 of 2017, I'm sorry. Notification 2 of 2017 comes into picture only when we are talking about supply of exempt goods. What he is saying is, correct me if I am wrong, he is saying when RWA is providing that water, they are not selling goods. They are treating it as a service. Right? Okay, so what it is a service? Pure agent will come into picture.
not like pure agent also, because we are not quantifying the, like we are not equating water to water. We are tapping it as a common service.
So he's saying, whether I agree or not, I am just trying to reiterate what sir is saying. Pure agent, sir, will come into picture only when there is electricity bill of house 10,000 rupees, which the association pays and collects the exact amount from the member of or the occupant of house 110. In this case, I am not able to assign how much water has been consumed by 110, 111, 112 on square feet basis, whether they are in the house or not. They might have gone for a holiday for 2 months, still I will charge them. Correct? So I am not allocating to a particular person based on consumption, so it may not satisfy the test of pure agency. Correct? Okay. Anything else on taxability? No? So now majority view is taxable or exempt? Exempt. How many of you? Still majority is exempt. Okay, taxable. Only 3. From pure agent you have changed. Very nice. Okay. Sir, why taxable?
So whatever amount RWA collects from the resident is taxable under reverse charge subject to a certain threshold.
ये reverse charge concept ही गलत है आपका. There is no reverse charge as well. What is reverse charge? When the service provider does not pay the tax, the service receiver pays the tax. Correct? No, that is reverse charge. Now in a RWA and a member, who is service provider? RWA. So RWA only has a liability to pay tax to the government. तो RCM कैसे हुआ? वो तो SCM है.
Basically, when it collects the water from the
Collects water now. It was collecting tax.
distributes water to the members, it
Okay.
takes the money. Then when it is filing the returns, then whatever amount it is taken, that has to be inclusive of the GST amount.
But that is not RCM.
Not asking, but it is
It
taxable.
is a tax. Correct? No? So you are saying it is taxable. No reason you have given it is taxable. Okay. So you said taxable.
It's a farm part of maintenance, so once crossing the threshold limit, so clubbing want to be the regular maintenance, that is GST to be charged.
So everything has to be added together and tax is charged.
When this RWA is not supplying the water,
Okay.
they are registered under societies act as you told.
Okay.
And even the HSN entry is somewhere like collection of maintenance, something they would have registered.
Right.
So this, they are not supplying the water, they are only facilitating the water service.
Correct. So I think all of us agree that it is not forming part of notification 2 of 2017 because we are not talking about supply of goods, we are talking about service only. But there also the point is that this service is not taxable because I am on a cost to cost basis recovering that money. Right. So that argument of it falling under this exemption notification is not there. We'll move a little ahead. In my view, RWA is providing services to their to the tenants or to the owners of the association, and so it will be liable to tax. Whether we like it or not, it will be liable to tax. Whether water collection or electricity connection is liable to tax or not, we'll come back to it a little later. But whether RWA is providing service, yes, it is providing services. Like it provides security services, correct? It provides landscaping services. They are providing services, right? So it is taxable. Now because it was taxable, and all the RWAs would have been under the GST net. What they did, they provided an entry under the service notification, not under the goods notification. Okay, and that entry, though, you know, the entire entry I have copy pasted here. Effectively, it means that maintenance up to 7,500 rupees per month per member is exempt from tax. Okay, so if your monthly maintenance cost is 6,000 rupees, you are not required to pay GST. If the maintenance cost is 8,000 rupees, then GST is required to be paid. Now there is another debate whether when it is 8,000 rupees you have to pay tax on only 500 rupees or on the entire 8,000 rupees. Maybe that discussion is for some other day. But as of today, the point is when RWA is collecting money from the members, it is liable to GST. We have to now understand whether this water charges is liable to GST or not. Correct? There is another entry, okay? So there are three entries, that A, B and C. A is for trade union, C is that 7,500. B, in very fine print it is written, for the provision of carrying out any activity which is exempt from the levy of GST. Okay? So now, can I say that the water which is being supplied, okay, is an activity which is exempt from the levy of GST and hence I am not required to pay tax on the same? Can I take that interpretation and say on water I am not required to pay tax?
Only water in a certain way you are not required to pay tax.
Water in certain way which is
Supplied in a certain way you are not required.
you are not, which is you are reading the first entry still. We have already come to service notification now.
But yes, exempt for the provision of carrying on any activity which is exempt. So the whole
So
supply of
because
water is
this
not
was exempt, so the intention has to be that our water tax is not required to be charged. Right. So do you think, sir, now it can be included in this entry? Huh? Sorry? Thinking now. Oh, opinion they Abhi will think. Right. What do you think? The point here is, this entry is in notification 12 of 2017. 12 of 2017 talks about services. So what it can exempt is only services. So when they are talking about carrying out an activity which is exempt, it can only be service, it cannot be goods. And what we are talking about is 2201 is goods. So this cannot fit into this entry at all. Which means the only entry available to us, there are only two options available to us. Either our maintenance is less than 7,500 rupees, then we have immunity from GST. Or second, we say water is not liable to tax at all, so I will not pay tax on the same. Okay, but now you tell me, if there is no RWA, if you have a maintenance company, the agreement, what will it say? The agreement will say, I will do landscaping, I will clean the glasses, right? Whenever you see the glass, it will be clean, right? I will give you 24 hours power backup. If there is a power cut, I will give you power, right? By way of generation of power through DG, and I will give you water also. That is the contract I have entered into it. That means, is it not a single contract?
Yes.
Now you are breaking it into two different contracts. One maintenance and second supply of water. Same RWA, if I am not part of the RWA, I am 10 houses away from that RWA. Can I tell the RWA, anyways you are getting tanker, no, get water for me also, generate electricity for me also. I am not part of that association. Will they give? No, they are not required to give. Maybe out of love and affection they might give. Otherwise they are not required to give. Correct? That means it is a single contract where the RWA has to satisfy all the requirements which a member has to get. Somebody said basic necessity. That is a basic requirement of the contract. This water charges being paid additionally will also be liable to GST. Do you agree now or still no agreement? Agree? Not agree? No. Whatever you say, I will not pay. Reason if you give, I am ready to change my answer.
Sir, when he is acting as a pure agent and he is collecting it over and above the maintenance charge, in such a scenario, he can always defend that I am acting as a pure agent and I don't need to collect GST.
Excellent point. With so much of passion. Two things I could pick up from that. One, I am acting as a pure agent. Correct? No. And second, over and above maintenance I am collecting. 2 points I could get. Sir, how is maintenance computed? Total cost divided by square feet, total square feet. So it is not over and above maintenance. Correct? No. Total kitna kharcha hua divided by total square feet.
No sir, I am just talking about the scenario where the tankers, just like you pointed out, where the tankers lines are required to be paid, such scenarios, some welfare associations have asked the residents to collect, that they will be collecting it over.
Correct. So they had fixed at the beginning of the year, 5 rupees per square feet I will collect. At the end of the year, whatever is the actual expenses, based on that I will debit the differential. But the differential is becoming so huge they don't have money at all. So they are saying instead of collecting at the end of the year, I will collect at the end of the month itself. But that is part of maintenance cost only, no? Correct? So I said no, I heard some no. She said no, I have to give a reason also. Right? Yes, also you have to give. Yes, Mr. Ashok. Ashok is the most aggrieved party. He stays in an apartment complex. There are 2,000 apartments. 100 are his friends only. Right.
So coming to his point, so there is a maintenance cost which we are taking as a service part, and this is a goods part. So what they say, assume that the water which is there.
Sir, manure they have purchased for landscaping. Is it goods or part of service?
Landscaping is part of service.
No, but manure they have purchased, no?
No, sorry, I am talking about water part.
No, I am telling the same thing. I am coming to water only through manure. Manure also they have purchased. Will it go as part of service, or you will say no, manure is good, so it will be treated separately?
Whatever agency we are putting up, they will get all the kinds of goods to provide us the services. That is one part. But coming to the water thing, so whenever there is an indirect form of water, what you are getting. So let's assume that let's take an example that common electricity of building is coming in a common meter.
Correct.
Okay. That has to be borne by the
All the residents.
individual houses. Okay. Now the RWA is just playing a role of just passing on that cost from the resident and giving it to the electricity board. Correct. So this is kind of a reimbursement, or I can say a pure agency.
Sir, security service also same thing only. Security services for common area. I have identified somebody who will place security. I will divide it among all the residents and I will collect that much money. How is security different from electricity? Same only. In my view, whatever the association collects, in whatever name it collects, as long as it is part of the maintenance budget, it will have to be below 7,500, no GST. Above 7,500, GST will be applicable. Even if it means water charges are subject to GST. Unfortunately. Okay? But
in a place where there is, in a building where there is a company, the maintenance building takes place for electricity, so many units into so much. Something else, I think water, so many units into so much. Maintenance, some X amount. And the GST is only on the maintenance.
you will have to give that phone number to me. That is my potential client. That is my, so give me that phone number, email ID and treasurer's name. That is my potential client. Ashok, you also. If you are following what you said.
So,
Right? But there is one circular 206 which has been issued, which strangely says that when RWA collects electricity even for common area charges, they are in the position of a pure agent and hence not required to pay GST. I don't agree with this circular, but this is a beneficial circular which you can use. So there they are talking about electricity for common area not required to pay GST. I completely disagree with this circular, but because it is helping our cause, we would want to use this circular which was recently issued. Okay, circular 206. Clear everyone? I don't agree that association can ever be a pure agent. Okay? Because when can you be a pure agent? When there is an identified person, like somebody was mentioning, there has to be an identified house. The invoice should come on that person. Okay? And I decide to pay and collect that money. Only then I am a pure agent. For common electricity, I don't get it in the name of a particular person. Right? So I cannot be a pure agent at all. Right? In fact, it says, that circular says, when the landowner collects electricity from the tenant, okay, he is a pure agent. How can landowner be pure agent? The electricity bill is in the name of landowner only. So how can he be a pure agent? Right? So I don't agree with this circular, but the circular you can take the benefit as far as electricity, and same question can be used for water also. Right? Okay. Now let's go to the next very important topic, okay, which is cross charge versus input service distributor, ISD. right? Okay. Let's discuss first about cross charge very quickly, okay? Now there is Schedule 1. Schedule 1 says when there is a supply of goods or services between distinct persons or related parties, even if there is no consideration, GST is required to be paid. Classic case, I have an office in Bangalore, I have an office in Mumbai, I do a stock transfer of goods from Bangalore to Mumbai, I am required to pay GST on the same, even though there is no consideration because of Schedule 1. Correct or not? Right? Likewise, if Bangalore office has rendered services to Mumbai office, okay, they are required to pay GST. Right? So we are focusing today, in this discussion we are focusing only on distinct persons and not related parties. Right? Okay. Now what is the definition of distinct person? Section 25(4) gives the definition of distinct person. Let's not get into too much of details. If I have taken multiple registrations or if I am required to take multiple registrations, all these multiple registrations will be treated as distinct person. Example, in Bangalore, I have taken 2 GST numbers. Can I take?
Yes.
Based on location. Earlier it was based on businesses, now it is based on location. So I have one office in Koramangala, I have one office in HSR layout, I have 2 offices, 2 locations, I have taken 2 GST registrations. They are deemed to be distinct persons. For income tax purposes, single person. PAN application, single person. Financial statements, single person. But for the purpose of GST, I will have to file 2 GST returns. I will get 2 A7010s of 2A not matching with 3B. Correct? Right? So there are 2 different persons. I have to, and if the Koramangala office has rendered services to HSR office, that will also be liable to tax because of schedule. Clear everyone? Okay. Right. Now, what is the value of supply? Okay, I have rendered services to my branch office. What is the value? There is second proviso to Rule 28, which says where the recipient can claim full ITC, then whatever you want to raise as an invoice, you can raise and that will be treated as the open market value. So if Koramangala has given services worth 1 crore to HSR office, but they want to raise an invoice only of 1 lakh, that 1 lakh will be the value. Okay, and there is a circular also which has clarified this, that even if you given, in fact that circular says even if you don't raise an invoice, the value of invoice is 0 and it is deemed to be the open market value. Okay, again I don't agree with that circular, but okay. Now, not related to what we are discussing, but in a lot of audits now I keep getting questions from a lot of friends. They say, I have raised invoice to my branch. Okay, my branch is not going to make payment to me. But one of the conditions is that you should have made the payment to your vendor within 180 days for claiming the credit. How do I satisfy? Correct? Now, have you received that question from audit department somewhere? What is your answer?
Yes,
there is luckily proviso to Rule 37 which says transactions covered under Schedule 1, payment is not required. It is not required. It cannot be made at all. How will you make a payment or invoice raised on HSR layout by Koramangala? How will you draw a check if you have only one bank account? To whom will you draw? TDS, how will you? TDS is not required, but how will you draw the check? Impossible. Correct? So that is why they said Schedule 1, I know payment will never happen, so you are not required to pay. It is given second proviso to Rule 37. Not relevant to what discussion we are having, but I just thought it will be important for us to understand this. Okay? So this is as far as distinct person is concerned. Okay? Now, what we have to understand is, when will there be an opportunity where Schedule 1 will come into picture? Schedule 1 will come into picture typically when head office incurs certain expenses for its branches. Right? Now, what are those expenses which head office can incur? I have listed down a few. There could be a lot of expenses. External cost, which the head office is dependent on an external party. That could be software licenses, assuming they have a SAP. For every employee, a SAP license will be required. Now, SAP will not get into contract with my Delhi office, my Bombay office, my Mumbai, my Ahmedabad office. They will say, I have contract with Bangalore, how many licenses you require, I will give you. Right? So, Bangalore is getting all the license invoices which is being used even by Bombay, Ahmedabad and Delhi. Correct? Right? Okay. Next, auditor fee. The auditor is sitting in Bangalore, but he is doing audit of the entire company. Right? Then marketing. I am doing marketing sitting in Bangalore, but the ads are getting displayed even outside Bangalore. Correct? Wherever IPL is happening, my ads are playing there as well. Right? Okay. IPL, let's not discuss about Bangalore team. Right? Okay. Next, internal cost. What are the internal costs which head office is incurring on behalf of the branch? I have a common HR team sitting in Bangalore. So if any interview is to be scheduled, the HR team on Zoom is conducting those interviews. Correct? So only HR team is sitting only in Bangalore. There are no HR teams elsewhere. Then I have accounting team who is doing accounting for the entire company sitting in Bangalore. So that salary cost also is being incurred only by Bangalore team. Then director remuneration. Director is sitting here, but he is taking decision for whole of India. Right? So these are internally generated costs. The few are externally generated costs. Right? Currently what everybody is doing is, whatever in their SAP or Oracle comes in cost center admin, corporate office, not linked to any project. Total that at 10% profit divided by total group's turnover multiplied by the turnover of each of the branches, they are raising an invoice on a quarterly basis, half yearly basis or a yearly basis. Correct? That's the practice everybody is doing. I can see some of you, oh, you are doing this, not doing that. Oh, you are supposed to do that actually. Right? Okay? So on a periodic basis, invoices are being raised by head office to branch. Okay? Now, the issue now in this case, cross charges, how do I value these services when the credit is not available? When the credit is available, the circular also says whatever is the value you can assign and then you can raise the invoice. But if credit is not available, how do I assign the value? Like hospitals. Okay, I have a head office in Bangalore for Aster Hospital. The Aster Hospital is there in Mumbai also, Chennai also, assuming. Okay, how will they raise an invoice? Because whatever invoice they raise, the value can be questioned. Right? Second, the most important issue, especially for hospitals, the first AR, I remember the most popular AR was Columbia Asia only, where they said employee cost also should be included or not. Because the employee might be sitting in Bangalore, the HR employee is sitting in Bangalore, but he is doing work for whole of India. Right? So whether employee cost should be included or not. Okay? Third, there could be a possibility where branch is providing services to head office. Is there a requirement of branch raising an invoice on head office or not? Okay, that was third issue. Now, what everybody will do, invoice, say assuming I have got a contract from Chennai, okay, my customer is in Chennai and I have an office in Bangalore, right? The contract is given to Bangalore office, but 20% of that has been outsourced to Pune. Okay, so Pune will have only inputs, there is no output because they cannot bill to Chennai, right? Bangalore would raise an invoice on Chennai and take the invoice from Pune. That was the only useful option I could think from cross-charge where branch could raise an invoice on head office. Otherwise, this option of cross-charge had multiple issues only and did not have any solution. Okay, that's what I mean, right? Okay. Now, the second option, we'll compare those two and then go to the amendment. Okay, input service distributor. Section 24 said you have to mandatorily obtain registration. Okay, Section 20 says if you have obtained ISD registration, take all the invoices in ISD and transfer it to branches based on their turnover. So let's take an example. I have taken an auditor's fee. My God, to the long yawn. Okay, right. So boring, huh? Make it interesting. Wait. After all the background, all questions to you only. Right? Okay. So now, what I would do is, assuming I have an auditor's fees on which GST is a lakh of rupees, right? And I have only two branches, only two offices, head office and a branch office in Chennai. 75 lakhs turnover in Bangalore, 25 lakhs turnover in Chennai. So what I would do, 1 lakh divided by 1 crore into 75%, which is Bangalore's turnover, sorry, into 75 lakhs, okay, is my Bangalore's turnover. That much amount of credit, 1 lakh into 75% will come to Bangalore, 1 lakh into 25% will go to Chennai. That is what I was required to do as far as ISD is concerned. Okay. Now, there was another rule, Rule 54(1)(a). Because by mistake, instead of raising invoice on ISD, what if the invoice is raised by the vendor on the main GST registration itself? Okay, and also RCM. If you look at the ISD returns, there is no option to make payment. Only late fee I can make the payment. Otherwise, there is no option to make the payment. So if there is a lawyer's bill for whole of India, I have received services. How do I make the payment? So the option under Rule 54(1)(a) was that you take these services in the name of head office, make the payment, head office will raise a taxable invoice on the ISD, ISD will take that credit and then distribute it to everyone. Okay, that was the option given under Rule 54. Okay. Now, what are the issues under ISD? Okay, let's look at presently. Okay, ISD only for external cost, because I am an input service distributor. Whatever has come to me as input service, I can distribute. Internal cost I cannot distribute. Correct? Like HR cost, I cannot distribute. because so nobody has raised an invoice on me on it. Second, corporate office has purchased certain goods. I cannot cross charge because it is goods and I am a input service distributor, not input goods distributor. Right? Third, even if I follow ISD, for internal cost where I am not able to charge anything to the branch, I have to follow cross charge mechanism. So even if I follow ISD, take the another registration, I will get notices for that registration also. Still I will have to do cross charge. Right? That was another issue. And fourth, in case of cross charge, all of us were transferring credit to the extent required. Correct? No. Mumbai office, 20 lakhs to be paid, raise on cross charge invoice. I can see so many people nodding and laughing. Correct? ISD is based on formula. You can transfer only whatever the formula allows. So which means there will be accumulation of credit in certain branches. Right? These were the issues in ISD. Because of which ISD was not a preferred option. Everybody was following cross charge only. Most of them were following cross charge only. Now what happens? There was a circular which was issued. Circular 199. Okay? Which was issued. It said whether ISD is mandatory. Everybody had a doubt that ISD will be mandatory. What will happen? We are following cross charge because of convenience. They said no. Best. No, ISD is not mandatory. Second issue, valuation of invoices raised by head office to branch office. They said if the credit is available, whatever value you want to raise, you raise. Even if you have raised zero value also, no problem. Right? What was the third issue? Whether the salary cost has to be included for the purpose of computation of cross charge or not. They said salary cost is not required to be included. Amazing circular, no? Right? Whatever we have followed till now, thinking what we have done is correct, everything has come in the circular formats. Right? So all three, the industry issue, they gave a very wonderful circular. But in the GST Council it was discussed that currently ISD is not mandatory. We will give a circular that ISD is not mandatory, but from a future date, we will make ISD mandatory. Is this clear? That was the discussion in the GST Council. So circular was issued, but then after that, Finance Act 2023, it is an act now but not notified. To the extent of GST portion, it has not been notified, so it is not effective. They introduced certain sections which they believe would make ISD compulsory. Okay, so according to them now, after the notification are passed for making the Finance Act effective, right, ISD will be mandatory. That means immediately after the notification is passed, we will have to file an application for ISD registration, immediately take the new registration, contact all our vendors and say from tomorrow to the extent of services which are common in nature, please raise the invoice on my ISD registration, not on my regular registration. Clear? Now Finance Act 2023 is not mandatory, is not effective as of now because Center has passed, the President has signed also, correct? But states have not passed the corresponding amendment in the SGST laws, right? So once state also pass, and then states also, approve, what do you say? Speak to the center and say we have done all the amendments required, and both center and state come together and issue a notification that effective this date, the provisions of the Finance Act 2023 will be applicable. Only from that date, I believe ISD will come into existence. Otherwise, till then, because of Circular 199, ISD is still optional. Okay. Now, what happens once ISD becomes mandatory? Okay. Once ISD becomes mandatory, first obtain new GST registration. Second, identify all the costs which are common in nature. Identify all the costs which are common for the entire group. Tell all those vendors. So let's take an example. Okay, there is your chartered accountant. Very easy example which we can relate to. I am a company. I have a chartered accountant who is doing audit services for me. Is it common or is it specific to a branch? Common. I will have to tell my auditor for statutory audit, please raise invoice on my ISD registration. I will get a separate GST number. I will have to communicate to him. Okay. Now in Bangalore, I have warehouse and I want to do a stock audit for Bangalore. Is it common or specific? Specific. So what I have to tell my auditor, for this assignment, please raise the invoice on my Bangalore GST number, not on my ISD GST number. Is this clear? Third, the same auditor, I believe there is some fraud in Ahmedabad and Mumbai. So I want to do a fraud detection, for which report will be given to Bangalore. Of course, the fraud detection report will not be given to Ahmedabad manager. Correct? It will be given to Bangalore manager only. Right? So invoice is also raised on Bangalore only. Specific or general? Specific or common? It is actually common specific. It is common to the extent it is not relating to Bangalore, but specific to the extent it relates to only Ahmedabad and Maharashtra. That means that specific invoice will have to be broken up when I am transferring the credit based on the turnover between Ahmedabad and Mumbai, and not all India turnover. Imagine the amount of work. Today, GSTR 1 we file up to 11th. Our guys are busy up to 11th. 12th, 13th, some breathing time, because GSTR 2B is not available. From 14th, GSTR 2B is available, so again work starts. So 14th to 20th, again they are busy. So government thought, this 12th and 13th, unnecessarily we are wasting time, nobody is doing work. Okay, 13th is the due date for ISD returns, for which the data will be available from 12th, because it is based on the GSTR1 of your vendor. So GSTR1 of the vendor is on 11th, data will come to you on 12th, 12th download the ISD data, 13th you file the return. So you are preoccupied for the entire month. Amazing, no? Right. Okay. So now, how do you prepare for ISD once it becomes mandatory? Obtain new GST registration, communication of GST number to all the vendors. In the purchase order, you have to specifically, you will have to identify what is common. Tell him in this GST number only. If you give him this GST number, invoice will not be processed. Correct? So all that circus, you will have to identify whether it is location specific, credit has to go to that location only. Two location specific, it has to go to those two locations only. Common to the entire company, it has to go to an entire company's turnover basis. Right? And it does not stop here. Assuming you have, in Bangalore, you had a get together, employees get together, where you went to Leela Palace and spent money on food, amazing food. Okay, some 10 lakhs, 20 lakhs bill with 18% GST. Right? You got that bill, you told Leela Palace it is common because employees of other branches have also come. So ISD registration GST number you gave. So in GSTR 1, Leela Palace filed this for your ISD. This credit is appearing in your ISD. What to do? It is an ineligible credit or eligible credit? Food. Ineligible credit, correct? It is appearing in your ISD registration. When you transfer the credit to your branches, the current law says you have to break it into eligible credit, ineligible credit, and then raise the invoice on your branches. We thought GSTR 1 and 3B is settled, so now I can do something in life. Don't worry, we have ISD also. Right? Okay. Right? I don't know whether I am able to communicate well or not, but the problem is huge, and all of this you will have to do it in 2 days. Impossible. Right?
Sometimes even the statement will get downloaded very late. Even the 6A, the document, whatever is available, it will be not
available until 12th. That is the next point is that only. Issues. Right? Portal issues I have not considered because that will never end. Right? Okay. What are the issues? First, the ISD branch was required to transfer, ISD registration was required to transfer only 1 lakh credit to Mumbai. In Excel, Mumbai turnover got replaced with Delhi. So Mumbai got 5 lakhs credit. Now notice will go to whom?
the person who has received the credit.
The person who has received the credit does not even know. Based on invoice, he has claimed the credit. Actually, the law says on ISD you cannot raise a demand at all. The demand will be on Mumbai. Now Mumbai will have to prove the credit is correct. All the formula is in Bangalore. It is our branch only, but to get the data from our branch is difficult. From third party it is easy. Correct? Now all of us have experienced that. Right? Okay. Next. What if, look at the scenario where I have an office in all the 22 states. Okay? And all the 22 states are procuring services which are common in nature. Should I take IST registration also in 22 states? That means I will have 22 GST registrations and 22 IST registrations. 44 registrations I will have. So can I have multiple IST registration? There was a FAQ earlier which says yes, where is the restriction? Take how many registrations you want to apply, please apply. Whether I will give or not, what documents I'll ask is secondary. Correct? How much ever you want to apply, you can apply. So imagine if I am availing common services from multiple locations. How will I track in 2 days? How will I transfer the credits? How will I raise invoices? Right? Third, now when I have a DTA unit and I have a SEZ unit, whatever relates directly to the SEZ, what do? I will ask my vendor to raise an invoice on the SEZ directly. It is used for authorized operation, so no tax. Whatever is common for both my DTA and SEZ, I will get the invoice raised on DTA, and DTA will raise a cross-charge invoice on SEZ, but that will also be zero-rated supply because DTA unit is rendering services to SEZ. Okay, but now in ISD, my auditor will raise an invoice on my Bangalore head office, which is DTA, and charge GST. What is the role of ISD? ISD does not supply any goods or services, it only distributes. So what it will do? Based on the turnover of SEZ, it will transfer the credit to SEZ also. That means there is going to be accumulation of credit as far as SEZ is concerned. Able to follow the complexity here? This is a, forget it. This is not. This is a challenge which we are going to face in maybe 5-6 months time. Now it is election, so ISD is not being made mandatory. The moment elections are over, all the states will be forced to pass this act amendment and notification will be issued. So any company having more than one branch incurring common cost, this will be the issue. Right? Okay. The issue again is ISD is only for external cost, but internal cost schedule will still exist. So I will still have to do cross charges. Is this clear? Right? And of course goods also. I will not have any way to cross charge it to my branch through ISD. I will have to cross charge it by way of rent through a cross charge invoice. Clear? Okay. But the question still remains whether ISD is mandatory or not. What is this? Now full from half an hour I have been saying ISD mandatory. I also send my message to the client also that we have to discuss tomorrow on something urgent. Now you are saying whether ISD is mandatory or not. Right? The act only says you have to take registration as ISD and you shall transfer the credit. That is what is the amendment which is being talked about. Okay. So look at this. Okay. It says section 2 subsection 61. Okay. It says office of the supplier of goods or services or both which receives tax invoice toward the receipt of input services including invoices in respect of 93 or 94 for or on behalf of the listing person referred to in section 25 and liable to distribute ITC in respect of such invoice. Only if I receive invoice I will be liable to distribute. No, I will not receive invoice only. I will not take ISD registration only. Then, no, ISD is mandatory. Okay, schedule 1 is also mandatory. No, schedule 1 says when I am rendering services to my branch, I am required to raise invoice. I have already raised invoice for whatever services you are talking about. There is still a possibility to say ISD is not mandatory, and even if it is mandatory, whatever had to be transferred, I have transferred by schedule 1. Because what is the role of ISD? To transfer the credit which does not belong to Bangalore to the place where it belongs to. Exactly the same thing I am doing in cross charge. Correct? Exactly the same thing I am doing in cross charge. There are a lot of decisions as far as Senwide credit rules is concerned which said, okay, he has not taken ISD registration. But what he had to do, he was not supposed to take credit in head office, he was supposed to take the credit in factory. He has taken the credit in factory only. So what he was supposed to do by ISD, anyways he has done by taking the credit only in factory. The objective of the law has been achieved. So don't ask him to take ISD registration. The same logic we will be able to apply and still survive this mandatory ISD argument. Is this clear? Who are my existing clients, ISD is not mandatory. Who are not my clients, ISD is mandatory. Correct? Correct, no Harrison? That is how you send the proposal to all my clients. Right? Okay. Next, investigation. Okay, let's go to the next topic of investigation. Section 65 is audit. Section 67 is inspection search, okay, and section 70 is summons. If you don't pick up the call of the officer 2 times, third time you will straight away get summons. Correct? No, right? There is no value of summons. Earlier there was value for summons. If somebody receives summons, you would get scared. Now, if you don't get summons within 6 months time, that means please check your GST registration has got cancelled. That is why you have not got summons. Right? A client said, sir, every day we are getting notices, sir. Said, best sir, if you stop getting notices, that day you call me because your registration would have got cancelled. Till you are getting notices, your registration is live. Cancellation of registration is a bigger problem. So if you don't get notices now in 1 month, please call me that time. Don't call me now, I will address all the notices. Right? Okay. So now we look at section 67, we look at section 70. Section 67 talks about a case where the officer can enter your premises without giving a prior notice to you. But once he enters, he has to ideally show something called as INS 01, inspection 01, which is given to him by the Joint Commissioner. Okay, where the Joint Commissioner says whether he is conducting inspection or whether he is conducting search. There is a lot of difference between inspection and search. Okay, that is specifically to be mentioned in INS 01. Second, for which financial year is the INS 01 being given? Third, for which address the inspection or search has to be carried out. If INS 01 is given for office, then he cannot enter the house. For that he will have to require another INS 01. Or in the first INS 01 itself, the premise has to be mentioned. Fourth, the reason why the inspection or search is being carried. You know currently how summons INS 01 is issued? They will come to your office, our client's office. There is this INS 01 over. I will not allow you to take copy also. Okay? That INS 01 will be blank. Nothing will be there except for signature of the Joint Commissioner or whoever is the authorized person. Except for that, nothing will be there in the INS 01. They will do full R&D of your records. Then whatever mistake is found, they will fill that in INS 01. And that will be given to you along with show cause notice. To say, look, I had got an idea that you have done some fraud in input tax credit. I had got INS 01 to verify the input tax credit. I am doing verification on input tax credit. That is not how inspection is required to be carried out. They should know why they are coming for. Otherwise they are doing audit. See, today also state what are the documents they are asking in inspection. Please match 2A 3B. Please match GSTR 1 3B. 1 3B not matching, 1 GSTR 9 not matching, 1 9C not matching, 9 9C not matching. 9 9C should not match. That is why 9C is reconciliation statement where it reconciles 9 and 9C turnover. No. Right? But that is what they are asking even in inspection. Right? If you look at the section 60, see, if they have to do 1 3B matching, that is section 61, scrutiny. If they want to check whether all the records are available or not, section 65, audit. But if they have some idea of I have done something wrong, then they can enter my premises under section 67. And if I don't give the details, they can call me under section 70. Right? There is a reason why all these sections are there. But what is happening till now is section 67, they will enter, they will identify the issues and then they will report that in INS 01. Correct? So now, luckily, one guidelines has been issued, instruction has been issued, instruction 1 of 2024, the first instruction of 2024. So whatever we discussed till now was what was practically happening. This instruction says all this should not be done. What they should not do? First, INS 01 should be for a specific query. It cannot be a general, they call it as fishing or roving inquiry. It cannot be a fishing or a roving inquiry that if I find some mistake, I will issue a show cause notice. No. That cannot be the scope of section 67 or section 70. Right? If you are dealing with, and I will take you through each of this, I have not summarized it because I thought the essence will go. So whatever was important in this instruction, I have copy pasted in this slide. Right? Okay. So the point is, if you are dealing with multinationals, if you are dealing with government companies, don't just straight away issue summons. Please issue a letter to them saying, I am starting an inquiry in your case. This is the issue I think could be the problem. Please submit the documents. And if they fail to submit the documents, only then you issue the summons. Otherwise, don't disturb them. Correct? Mr. Rajat, my friend here, amazing strategy in stock market, okay, amazing strategy. He says wherever the DGGI goes and issues notice of 100 crores, 200 crores, 500 crores, the stock price will reduce. Purchase those shares. Because we know DGI notice will never hold good at all. After 2 months, so he was telling me polycap or something, how much was it? 5,000 became 4,000. Now again it gone to 5,000 and he sold it. Amazing strategy. Beautiful, no? How to use GST in other avenues. How to use GST in GST we don't know. Other avenues we can know. Right? Amazing strategy. Right. He did the same thing even for a few other companies. The Paytm also did the same thing. Now, whatever cashback he got now, 10x of that he has paid. Right. So, please have a look at the instruction 1 of 2024. What are the issues currently in inspection? All those have been addressed. So now at least we have to be very careful about when the inspection comes, what we should be giving and what we should not be giving. In fact, this instruction very clearly says, okay, anything which is available on the GST portal, why are you asking assessee to furnish that? GSTR 1 versus 3B, already report is available on the portal. Why are you asking them to give this? Right? So whatever is available on the portal, don't ask for those details. Right? So we'll go through one by one. Right? Okay. First thing is, the jurisdictional commissioner only can inspect the premises. So if there is a principal commissioner for the area, there is a central instruction, not a state instruction. Okay. So if there is a principal commissioner for a particular area, that person will have to create intelligence for all the assessees in his jurisdiction, and he will be able to conduct a inspection for that area. But if he finds out some wrongdoings because of his assessment of his jurisdictional taxpayers, he finds that somebody else in another jurisdiction has done something wrong, like fraudulent ITC, he will have to inform that to the other jurisdictional principal officer, principal commissioner. He cannot take any action sumo. Right? So that is first point. Second, there will be little repetitions which I am avoiding. Very interesting, okay? Even if you want to take any investigation, please take written approval if it relates to these 4 cases. What are those 4 cases? Matters of interpretation, seeking to levy tax for the first time. Gaming company, for the first time you are levying tax at the rate of 28%. Don't issue summons of investigation because it has come for the first time. Right? Because when the tax comes for the first time, there is going to be a lot of interpretation issues. For that you please don't harass the taxpayers. Second, if you are dealing with some big industrial houses, we know whom they are talking about, right? Or major MNCs. Now the issue will be who is major, who is minor. Correct? Okay. Third, matters with national implications. Right? I am not sure what that means. Maybe a defense company, or there could be a company who has a very huge share capital. If there is something done, the share capital reduces. I am not sure about this third part. And fourth, matters already before GST Council, where GST Council is already discussing whether badam milk is liable to tax at 12% or 18%. Why are you issuing notice? After I decide, you issue the notice. Correct? So in these 4 cases, without the written approval, please don't invoke section 67. Right? Okay. Anything procedure I am just skipping. The letter pass summons must disclose the specific nature of investigation. It cannot be general. I believe that you have done some fraud. You have to tell specifically what is the fraud which has been committed. So there are a lot of investigation letters which they specifically mentioned also. Okay, it says prove that the input tax credit availed and utilized by you is proper. Don't give that kind of letters. Is what specifically the investigation is told. Instruction is told. Okay. Information available digitally or online on GST portal must not be called for. In fact, you will not believe it, in our office, unless the client wants us to share, we don't even share GSTR 2A or 2B with the tax officers. Because audit is audit of my records. To 2B is not my record. Is it my record? Have I prepared? Do I have control over it? No. No, you will have to give 2B, otherwise everything will call it as a difference. You can decide what you want to do. But 2B is not my record, you have to do audit of my record, not somebody else's record which I have no control over. 2B as per my GST portal, different number. If I go and download from my table 8 of GST online, different number. On your portal, completely different number. State office, completely different number. How will we rely on that kind of a 2A or a 2B? Right? Next, summon should not be used as a means to seek information filled in formats of pro forma. Lot of times they say, please give input tax credit in the attached format. Whatever is maintained, please take it. Clear? Maybe they can ask for, these are mandatory columns which I will require. Like payment date. You will have to give because that is one of the conditions. Then you cannot say, no, instruction says specific format not required, so I will not give you this data. Not in that. Whatever is required as per law, that I will have to give. Right? Summons is in conduct of investigation must not convey request outside the scope defined in summons. If you have come for summons, if you have called me for summons, you have already told what is the issue. You cannot inquire for anything other than that. It has to be a focused approach. Right? Like I was saying, if the taxpayer has utilized ITC for payment, summons cannot raise issues to clarify if the ITC availed and utilized was proper or not. You cannot ask the client, ask the taxpayer whether it is proper or not. According to him, it is proper only. You prove that it is improper. Right? The content of the summons should be approved. Procedure I am just ignoring. And very important, the third point. We have seen cases where summons have been issued in 2019, 20, 2021. Very urgent, please give the details. Till now, show cause notice not issued. So this instruction very clearly says that if a proceeding is initiated, it has to be closed within 1 year's time. Don't wait. Center thinks that everything is under section 74. So I have time for 17-18 also, I have time till August 2024. Right? Don't wait for last date. Within 1 year you have to close your proceedings. Right? That's about it. Right? So anything on this instruction? It is a very good instruction. What was the wrong practice? All of it they have highlighted and said, please don't do this. Right? So which we can definitely use. Right? Next, the next point, the next topic, rectification of order. Okay? ADT 02, ADT 01 issued. We gave all the documents without considering. ADT 02 also issued to us. We replied to ADT 02 also, though there is no requirement to reply. They gave us DRC 01A, legally not required to reply. That also we replied. They gave us DRC 01A, that is show cause notice. DRC 01, that is show cause notice. Now I have to reply. I replied also. Personal hearing was also given. I attended that personal hearing also. Additional submissions also given. Summary of submission also given. Still, whatever was there in ADT 02, copy paste in the order. Entire thing has been copy pasted exactly the same way. Correct? Now the question is, should I go for appeal or should I go for rectification of the mistakes apparent on the record? Okay? If I have to go for appeal, section 107, I have to make a pre-deposit of 10% of the tax. Okay? If the demand is in crores, 10% of that I will have to pre-deposit. Only then the appeal will be admitted. Otherwise, the appeal will not be admitted. The second option which is available is section 161. Okay? Section 161 says you can rectify any decision, any order, in fact, a notice or a certificate also, anything. Okay? Can be rectified. But when it will be rectified? Only if there is an error which is apparent on the face of the record. Only if on the face of it, if you can see, like when we are doing a statutory audit, on the face of it, balance sheet is not tallying. Mistake apparent on the record. How can liability side not match with asset side? Maybe suspense account, we are not an adjustment properly. That's all. That's the only reason, right? But on the face of it, there is an error, right? Right. Now, what does it cover? What does it not cover? Because the expression error which is apparent on the face of the record, okay, has not been defined. There are a lot of judgments in income tax. There are a lot of judgments in Karnataka VAT Act. Even in fact, in case of customs and excise, which defines what is the scope, though it has to be discussed on a case-to-case basis. But thumb rule, what is covered is if there is a clerical mistake. My turnover is 1 crore, but for rule 42 computation, they have considered 50 crores and asked me to reverse additional amount of credit. Mistake apparent on the record, but 50 crores is not at all my turnover, right? So I can apply for rectification under section 161. Second, not considered any specific provision of law. Okay, interest demanded at 24%, right? Already there is a rule or a section 50 subsection 3 which has been amended retrospectively to provide that interest is only 18%. No need to file appeal. You can apply for rectification because one of the provisions of the law has not been considered. Third, not considered the fact of the case. I am a software company. They have assessed me as a manufacturing company. The fact of the case only has not been considered properly. Fourth, I have made some submissions. I have made some documents available. They have not considered those documents. Okay? Corporate guarantee is one more topic which we are going to discuss. I have already submitted that the corporate guarantee relates to a loan which was issued in 2012. So even if there was a service that was in 2012, how can you levy tax on that same corporate guarantee in 2017 when GST came, when the entire transaction was executed in 2012? Correct? So I have already given the submission of sanction letter and the corporate guarantee agreement. If that has not been considered, apply for rectification. Interestingly, there are few judgments which say if the person who was required to pass the order has not considered a specific judgment which is binding on him, even then rectification can be passed. Application for rectification can be filed. Is this clear? But what cannot be considered for the purpose of filing application for rectification? First, matters which are relating to interpretation, whether your house is affordable house or not affordable house, right? That is a matter of interpretation, maybe, right? Second, on the day when the order was passed, there was no judgment. But when you were filing an appeal, a judgment came in your favor, exactly same case of yours. That cannot be the ground for rectification because on that day the order was correct. On a future day, a judgment has been passed, right? Third, very interesting, okay, now the income tax case is said, if additional submissions are required to be made and elaborate discussions is required to be made, it is not mistake apparent on the record. So if it is very 1 or 2 lines submission, it is mistake apparent on the record. 50 pages submission, it is not mistake apparent on the record, that will not be entered in under section 161. Right? Okay. Now the rectification can be done if the officer comes to know about his mistake. Okay, in one of our case which Mr. Hari and I were handling, the officer had forgotten to charge interest. Then they had on their own motion, so if you pay, okay, otherwise I am going to rectify this order. Right? So officer on their own motion, officer based on a request from some other officer, or third, that will be only enhancement, or third, if I am the taxpayer, I have identified an error, I can make application, this error, please rectify. Okay, in these 3 cases, they can go for rectification. The issue here is, the application for rectification can be made within 3 months time, okay, and the order for rectification can be passed in the next 3 months, okay, which means from the date of the order, within 6 months time, I will get the rectification order when I will get to know whether my application was accepted or not. Now, if the application does not get accepted, I am already time barred from filing the appeal. It is like our CA exams. When we go for revaluation, that result for revaluation will come 10 days before the next exam. Correct now? If I have passed, anyways I have applied for it. Not that I am going to write it again and take Panga with CA Institute. But the point is, if I have to wait for 6 months, by that time I have, lost the opportunity of filing the appeal. So can I do one thing? I will file appeal also and I will file for rectification also. Yes? Yes? Unfortunately, there is an instruction issued by Delhi which should apply only to Delhi. Correct? But I am sure it will get copy pasted very soon by all the states. Okay? They talk about when can the rectification application be accepted or not. Now, we can disagree on the entire instruction, but that is the instruction which will at least be followed by Delhi. So what does the instruction say? Reason for rectification will have to be recorded in rating. Very good. Second, application for rectification has to be filed within 3 months and case has to be disposed of within 6 months time. No problem. Rectification is limited to mistake apparent on the records. Such rectification should not require additional representation. No problem. Submission missed to be considered by the authorities also cannot be considered for rectification. It is completely against what the judgments are about. In fact, we have to file for rectification of this instruction. First, correct? No, because the judgment says if you have missed submissions, then submissions will be the ground for rectification. But this instruction says additional submission is not considered, not a ground. It has to be only clerical error in Delhi, right? Interpretation points on facts of the case or from law perspective cannot be processed. That we have seen. Rectification cannot be done when an appeal has been preferred. So you cannot file an appeal and also go for rectification.
So when we go for rectification, it has to be done in offline mode mostly.
No, now online is applicable. Is available, sorry. Rectification is available online.
I remember doing it offline till last year.
Last year,
So when
GST is like this. Law will not get amended, portal will be updated.
So basically what I wanted to say was when we do it on a manual basis, then in that case, as it is we do it with the officer in front of us. In that case, if they are not going for the rectification, then only we will go for appeal.
But the point is, in our offices, only on last day rectification application will be filed. Correct or not?
Not as I experience.
My office, sorry. Right, wrong experience. Right? Okay. Then what will you do? You have applied on the 3rd month. 5 days after that he is saying that I will not rectify. Or he will not communicate only to you. After 2 months he is communicated I will not rectify. What will you do?
You have to wait for the last day till the to file the appeal.
But see this instruction, it says you cannot ask for 2 relief. See, appeal is also one relief.
So we will go for rectification. We'll talk with the AO, with the officer, but and we'll hope that they.
Tumba busy is in due date ide, naale bani.
Sorry.
What will you talk? He will say, I am too busy with all the due dates. Come after 1 month. We will discuss.
Then we'll have to file the appeal.
So the point is, even if I have to file rectification, because of the time limits, I may not want to file rectification. Practically, I might have to go for appeal. Except stray cases where you know the officer and you know that he has genuinely done some mistake and he will rectify it. No, they say the Delhi instruction says in these 2 cases, please consider the matter for rectification. What are those? Payment has already been made in DRC 03, but you have not considered the DRC 03. There you can consider for rectification. Okay. Arithmetical calculation like IGST amount in CGST, CGST amount in SGST, all that you can consider for rectification. So that means others, which is not clerical error, they will not apply, they will not accept any rectification at all, which is very unfair. Right? Okay. Clear everyone? Let's move. Any questions till now? No?
Rectification.
Yes sir.
Can we wait for rectification order? Whatever the demand we think is incorrect, can we reduce that demand and make the deposit 10% and file up? Only leaving those matters which are.
See, once the rectification is done, under DRC 08, a new order will have to be uploaded. And you are filing an appeal against that DRC 08. So when you file an appeal, the disputed amount, undisputed amount will come. You will have to mention 10% of that. Again, it will ask for payment. See, today GST law is not a problem. Portal is a problem. How will you link this challan which you have already paid voluntarily, being a good citizen of India, you have already paid in advance. How will you link to this new order which is going to be issued to you in the future?
Because even in case of this DRC 03 payments, which is made, which is not considered. And
Now, currently, if you know the officer, they are considering. Otherwise, they are creating issues. Correct or not?
almost like we are paying double here.
No, you have paid in advance. Why did you pay? You should not have paid through DRC 03. You should have paid through the APL 01 only. That is what the circular also very clearly says. Correct? You have paid through DRC 03, you will have to ask the officer to manually accept it, which is a task. Unless you have contacts like Harshal, your friend Harshal. All officers' contact is there. Manually it will be accepted. Otherwise, everything online only. right? Can you move ahead?
If application under 161 is filed, but no action initiated by department, can we deem that it is accepted?
Deem that is accepted. He has to pass a revised order.
No, I'm assuming. So the erstwhile VAT law we had that if an application is filed and no action.
That is not there in
So
GST.
GST is not there. Now that I have filed an application, 3 months have lapsed, they have not initiated any action. Not that tab is visible on the dashboard of the officer also.
Correct.
He says I cannot do anything. So what is that I should assume?
See, the point is, in case of rectification, no, if he believes there is a rectification required, he has to pass DRC 08. If he believes rectification is not required, there is no form only to reject. So, I would think the officer will say, if I don't take action, that means I have not rectified. That means the original order stays or holds good. Correct, no?
Negative.
You negative law, we have to see now.
No. It will be like I will not be able to prefer enough. At least he rejects.
See, that is the issue with rectification. That is definitely an issue with rectification. One interesting point, I thought he will ask this question. Okay, I applied for rectification. Okay, 3 months over. 4th month I got a letter said I am rejecting this rectification. Section 107 says you can file an appeal against any order. This rejection of rectification application itself is an order. Can I file appeal against that?
Yes.
Under 107 you can file. But what are you filing for? For only those grounds which are mistake apparent on the record, not in the main aspect at all. So you lost. Correct, no? See, assuming you are required to reverse the credit under Rule 42 as per the department. Your contention is that I am not required to reverse the credit at all under Rule 42. That is your contention. Department says no, you are required to reverse, and the liability according to them is 1 crore. Now, according to you, even if you have to reverse, it is only 5 lakh rupees. So now, if you file an appeal against that, on 1 crore you have to pay pre-deposit of 10%, that is 10 lakh rupees, which is very high. So what you thought? You thought instead of 10 crores, I will go for rectification. The amount comes down to 5 lakh rupees because somebody else's turnover is included, and I will file an appeal on this revised order at 10%, which is 50,000 rupees. That was your action plan. PowerPoint presentation is sent to the client saying action to be taken. Right? You have said. Now the officer has said rectification application rejected. You are filing a appeal against the rectification order under section 161 in 107. What are you saying? The rejection is wrong. That's all you are saying. You cannot question that Rule 42 cannot be reversed at all. Rule 42 reversal is not applicable at all. You can only question that rectification, nothing beyond that. So again, it will be of no use at all. I would think that will be of very limited utility. Even though we can read 107 as any order can be appealed against in 107, but that will be of no use actually. Yes sir, please.
So there's a case where the officer issued DRC 07 in the portal along with the order copy. There's one more order copy what the officer issued. So in that DRC 07, he is demanded only for the CGST liability of 25 lakhs. And in the one more order copy along with the DRC 07, he is demanded 50 lakhs. So if I have to go for a appeal, so it is taking the deposit only for the liability what is demanded in DRC 07.
Correct.
So if I go for a rectification, it is which order I have to go for?
The actual order only. Though on the portal he might have done some typo error or he may not have uploaded properly. What is the actual order? On that only you have to apply for rectification, or if you want to file appeal on the actual order.
So again in the appeal, like they are asking for the rectification. Now the time is also the 3 months time is also gone.
In appeal they are asking for
They are
rectification.
asking to get the order rectified.
Ask them to give a letter, go to the officer. That is not your job. They have to internally do it. Correct. So you will file the appeal and forget it, that's all.
So the officer is telling us to file, the appellate officer is telling us to file the DRC only for that particular GST demand.
Which is correct, no? Which is correct. If he is asking for DRC 3, in this case DRC 03 can be filed.
So basically the rectification is still in the portal, it is not, like the officer is not having that.
It's a typo error. If we would have done the same typo error, CGST, SGST claimed in IGST is also typo error for us. Well, officer CGST forgot to update it in SGST. No, it is not. It is order itself is invalid. I think there is a procedural error. initial part we are in, so I think the benefit of doubt has to be given to the officer. Yeah, yes sir, please.
We can file the rectification first and then wait till the time.
No, his time limit is over.
No, due date, suppose the appeal is brought to you.
Then you can apply for rectification or you can speak to the officer. He will only rectify on his own motion and then give it. If you call him also on his own motion, he will do it.
Appeal due date is not over, so by the time
Right.
you can file the appeal, that could be one of the approaches.
Yeah, he can. If appeal, his point is that the due date is over.
We are talking about some other different scenario.
Then you can speak to the officer on his own motion only, rectify it and give it. Anything else? Move ahead. Cross empowerment, okay? Very interesting. Let's go to the background of GST. Straight to constitution only, right? Okay. Before introduction of GST, the point was, all of us were scared that even if GST comes, which is a one-point taxation, state officers are also going to call us for information, central officers are also going to call us for information. So GST will be no different from excise and VAT, right? GST Council, in the 9th GST Council meeting itself, even before the model draft was ready, had envisaged this problem and said we are going to have only one interface, where one assessee will have to go only to center or the state. And then subsequently, a lot of meetings took place, and then Circular 1 of 2017 was issued, where all the taxpayers were bifurcated into which were central, which were state, and that has now become a very dynamic, circular, because now we get to know only through the portal. Because at the time of registration, whom will I be allotted to? The system decides that. Okay, but the formula which was discussed was turnover less than 1.5 crores, 90% of the cases will go to the state, balance 10% will go to the center. Anything beyond 1.5 crores, 50% will go to the state and 50% will go to the center. How they are monitoring it, how will they get to know in the new registration whether my turnover is more than 1.5 crores, 2 crores, is not something which we have to bother about, right? There are other issues which we have to bother about, right? So that was what was discussed with the GST Council, and that is how either I was assigned to the state or you were assigned to the center. Even now when you go to the registration status, you will be able to find who is the jurisdictional officer or administrative office. And that is the office with whom you have to interact with. And any notice comes generally or any query comes will come from that office only. Okay? Right. Now, another interesting point, initially when the refunds were not online, right? My friend Rajat does a lot of work on refunds on GST, right? So when the refunds were not online at all, a circular was issued. He had a problem typically, right? He knows the state officer, does not know the center officer. How to get the refund processed? Correct? No? Typical issue. So now there was a notification which was issued where cross empowerment was given, where they said whether you are a state officer or whether you are a state assessee or a central assessee, you can file the refund application with whomever you want, depending on whether he is in a jurisdiction or not, and he will process the refund for both CGST and SGST amount. Correct? Only after the refund module was available online, it would go to the jurisdictional officer. Otherwise, there was a cross empowerment notification which was specifically issued under section 62B, right? Okay. Also, GST Council said that we are going to issue a notification to cross empower officers, so that the state officer can do work related to central jurisdiction, central officers can do work related to state jurisdiction. Okay. That notification never came. If you go to GST Council minutes, one of the, I don't remember the GST Council meeting number, but they had given a draft also of that notification which was never issued. Okay, but they had, in passing remarks, they had said, GST Council had said, investigation related matters, there is all India jurisdiction or cross empowerment is available. That means DGGI of center can actually go to the assessee who is assessed by the state, who is under the state jurisdiction also. DGGI can do, because it is a investigation matter. Is this clear? The background is clear? Now the point is, before the Madras High Court, this question came up, there were some officers who were assigned to state, but notices were issued by the center. There were some taxpayers who were with the center, but notices were issued by the state. They filed a writ petition. Okay? The court has categorically observed that one, cross empowerment notification was given only for refunds. Second, cross empowerment notification was required to be issued for others. It is there in draft, but it was never issued. Third, you have yourself bifurcated the taxpayers into state and center. If that be the case and no notification has been passed as of now, that means if you are a state assessee receiving notice from the center, it is illegal, it is without jurisdiction. If you are a central assessee receiving notices from the state, it is an illegal notice, it is notice without jurisdiction. Clear? So now our friend Rohit's answer, my friend Rohit handles only, so they have paid me some money saying that please promote us. So Rohit handles a lot of e-waybill matters. His issue is, right, my taxpayer is assessed under central jurisdiction. Can state issue notice at checkpost saying you are not carrying e-waybill? I will repeat again. I am a assessee having an administrative office of central jurisdiction. Okay, I am carrying goods without invoice, without e-waybill, which is incorrect. Can the state officer issue notice to me? Basis this judgment, state officer cannot issue notice because I am getting assessed under central jurisdiction. Center should have created a checkpost or a notification should have been issued that for all checkpost matters or all e-waybill matters, the state authorities are being empowered to issue notices. Till that notification is not there, please go back to your offices. All the e-waybill cases what you have, if the GST number belongs to the center and additional submissions basis this Madras High Court judgment, then all the notices are illegal, and so on this ground itself it has to be quashed. Whatever 200% penalty I have paid, please refund it back to me. Clear? How successful we will be, I am not sure. But is there a ground? 100% there is a ground. Is this clear?
It says that e-waybills are subject to state law.
Where, which section?
34 or like states can make rule how much area they want to exempt, how much.
Excellent. That is only for pin code. Which officer will go? Officer 1 will go here, officer 2 will go there. That's all. But for central officers, can state say, I will give the jurisdiction? Center has to give jurisdiction. No? The central law should say that these are my assessees, you can assess them. State cannot say, no, I have taken the power.
No, the CGST Act says, in case of wherever the goods is transacting between the states, I will take care. If it is within the state can make the exemption rules.
That is not there, sir. It says, I will have to carry documents as may be prescribed. That's all it says. It does not say state has been empowered to issue notices.
No, not issue notices, but to this in relation to this e-waybill matter.
Not there. 100% not there. If it is there, I will stand corrected. After the maybe session, we might want to discuss that. Yes, yes. Clear? Okay.
So they mentioned about the judgment 9th council meeting.
Sorry? Yeah, they discussed all the meetings. Right from 9th council to model draft. I also got to know from this judgment. Yeah, everything they discussed. Very good judgment. Is there a retrospective amendment? I'm not sure. But as of now, there is a good judgment. Now let's move to real estate. Right? Okay. We have a good amount of time. If there is any specific doubt on whatever we have discussed, you can. Otherwise, I will keep continuing. Okay. Next, real estate. Okay. Again, I am talking only about recent judgments which have come or recent amendments, not going back to anything beyond before October. Okay. Transfer of development rights is a big issue. Right? Okay. In April 2019, lot of notifications were issued, notification 3, 4, 5, 6, 7, effectively to say that development rights given by the landowner to the developer is liable to tax, but because on the first day you may not have money, we are postponing the liability to the last date of the completion of the project. Clear? That is what all the notifications effectively say. They get into time of supply also, they get into valuation also, and they also prescribe the rate also and exemption also. So it's like a new GST Act or a new GST law for the real estate which was introduced on 1st April 2019. Right? Okay. So now the issue has always been that whether development rights are liable to GST or not. And the fundamental argument which we have in this case is development rights are rights arising out of land, which is an immovable property. So the rights arising out of the land also should be immovable property. And because immovable property is not leviable to GST, because GST is applicable only on goods and services, and immovable property is not any of these, so tax cannot be levied. Second, on transactions relating to immovable property, I am paying stamp duty, which is already a tax. So the same cannot be the subject matter of CGST and SGST. Third, again GST Council discussion where they said we are keeping immovable property outside the purview of GST. On all these grounds, also the famous case, I am not sure if you read, Transfer of Property Act says rights of fishing in a land is also immovable property. So citing that case also, they said anything arising out of the land is rights in land which is immovable property, and so it is not, it cannot be levied to tax. Correct? That is the argument based on which there are some grounds, there is some case to say not liable to GST. For the first time, this matter went up to High Court of Telangana, okay, where the court had to specifically discuss whether development rights are liable to tax or not. And all the arguments which I mentioned now, all of those were placed before the court saying development rights are akin to land. It is land only. The land has already got transferred to the developer. End of it, the transaction relates to land. Schedule 3 says on land there can be no tax. What is happening in a joint development agreement? I agree to allow him to enter my premise, and at the end of the project he gets the land. Correct? So effectively it is a sale of land only, and so taxes should not be applicable on development rights. Okay? Unfortunately, and this was a JDA entered into post GST only. Unfortunately, all these arguments were taken. They said notification 4 of 2018, which was the question, not 1/4/2019 notification, does not prescribe levy. Levy is already there somewhere in supply where they define goods and services. Okay, it is only prescribing time of supply. So you cannot challenge the time of supply because it is only determining time of supply for a supply which has already taken place. Second, if I look at the joint development agreement, very clearly the land is not getting transferred on the first day. It is getting transferred only after the builder discharges all its obligation. At the end, he will get the land. Unless everything is sold, then he will not get the land at all. So the land is never sold to the developer. The objective is never to sell the land to the developer, but the objective is to give UDS to the buyers. Right? And third, only after the completion. So from that perspective, and from the perspective which was not discussed in detail actually, Schedule 3 talks about only land, sale of land. Okay? Compare this with service tax. Service tax said transactions in immovable property. When they use the word immovable property includes lands and rights in land. But GST uses the word only land. So from that perspective, unfortunately, they held that transfer of development rights will be liable to GST. This is the first judgment which we have received on transfer of development rights. There will be many more which will come. It will be against the taxpayer, it might be against the department, but as of now, this is one judgment which is a big setback for all the developers who are not paying taxes on development rights. Right? Clear? Next, corporate guarantee issue. Everybody is facing this issue, right? Corporate guarantee, right? There are two types of guarantees which we have come across apart from bank guarantee where we don't have an issue because it's an unrelated party. One is corporate guarantee, one is director guarantee. Now what is this corporate guarantee versus what is a director guarantee, right? Okay. Now, say assuming I have a company XYZ Limited which has been started now, and the holding company is ABC Limited. ABC Limited has a net worth of say 500 crores and XYZ Limited does not have a turnover at all. No bank is ready to fund this company XYZ Limited saying you don't have turnover at all, I will not be able to give you any loan. So XYZ said my rating has been bad because I have just started the company, but my holding company ABC has a very good rating. So why not we do one thing where my company ABC gives you a corporate guarantee and the director of the company is Narayan Murthy. So he also has a very good stature, so he also can give a personal guarantee. So if I default, XYZ defaults, then the money will be recovered either from Mr. Narayan Murthy or from ABC, which have a very good rating as far as lending is concerned. Okay, based on this director rating or based on this corporate rating, the loan is extended to the company, that is XYZ Limited, with a condition that either a corporate guarantee will be given to them or a director guarantee will be given to them. And then separately a director guarantee agreement will be entered into between the director and the bank, or between the guarantor and the bank. Guarantor in this case will be ABC Limited. Okay, where they say if XYZ defaults, then we will recover the money from you. Is this clear? Now the contention of the department is that if you would have taken bank guarantee, okay, you are transacting with some other company, but that company is a new company, or you are transacting with that company for the first time, so there is a doubt that you will be able to make the payment to them or not, so they are asking you for bank guarantee. So you go to the bank, you deposit that much amount of money, get a bank guarantee. The bank is going to charge you typically 1 to 2% as commission for issuing bank guarantee on the date of issuance, right? Now ABC Limited is related to XYZ Limited, or the director of ABC Limited is related to XYZ Limited, right? They are related parties. They have given you guarantee, right? It is a transaction under Schedule 1. In Schedule 1, consideration is not relevant. You have received the supply in the form of guarantee. If you have gone to the bank, they will charge you 1%. You have got it from the related party. You are required. ABC is required to pay 1% of the guarantee amount as GST for rendering services to its related party. That is the contention of the department. Is this clear? Right? Okay. What do you think, whether it is taxable, not taxable? Both director guarantee and corporate guarantee. Sorry? Oh, everybody is paying or no notice? Vinay, what do you think? Taxable, huh? Okay. Others? Sorry?
Director's guarantee
Not taxable. Why? RBI circular is an issue. Corporate guarantee?
Taxable.
Taxable, because RBI circular not there. Read that RBI circular, okay, which is mentioned in the circular given by CBIC. It says guarantor cannot charge money. Guarantor. It does not say director. Guarantor. They have read it only as director. Correct. So that means using that same circular, there is no open market value for this service also, and so it should not be liable to tax. That is one argument we can take, but we'll have to see how the judgments come when we take this argument. Okay. So independent of that argument, taxable, not taxable. Director guarantee, there is a specific circular which refers to RBI circular, and that RBI circular says for director guarantee, the director can never charge consideration from the company. So the CBIC circular says this service does not have any value at all. Open market value is zero because nobody can charge. Because the value is zero, director guarantee, no need to pay GST on the same. Is this clear? As far as corporate guarantee is concerned, RBI circular does not talk about it. So there is an open market value. Typically everybody is charging 1 to 2% in bank. So this is the value on which you are required to pay tax. So on corporate guarantee, what is your view? It is taxable or not? Taxable, huh? Why? Not taxable. For that also, why? For both you have to answer. When ABC Limited has invested in XYZ Limited, it's a 100% holding company of XYZ Limited. The requirement of XYZ Limited is that the holding company will pay money to XYZ whenever it requires. So when ABC gives guarantee for the loan to be sanctioned to XYZ, they are actually shifting their liability of giving money to XYZ to a bank. But it is actually a shareholder's activity which they are doing and not providing any service. That is point number 1. Point number 2, corporate guarantee agreement is between whom? Bank and
Holding
holding company. That means who are the contracting parties?
Holding company.
Bank and holding company. Subsidiary company is not even part of it. Correct? So even if there is a service, who is the recipient of service and where has the consideration flown to? Because first question is whether there is a service or not. Second is who is the recipient of service. I would think bank is the recipient of service because if not for the guarantee, they would not have been able to give the loan. And because of the guarantee, they were able to give the loan. So the supplier of the service is holding company only. Recipient of service is bank. But these two parties are not related to each other. Because they are not related to each other, Schedule 1 does not come into picture. Schedule 1 does not come into picture, no need to pay tax. Okay. But Rule 28, second proviso, they have added to say 1%. That is a valuation mechanism. But valuation will come into picture only when there is a supply, right? If there is no supply, so I would still believe that this transaction is not a supply, but we'll have to, lot of cases have been filed, lot of petitions have been filed, we'll have to wait for judgments. But if some taxpayer wants to be very conservative, okay, then second proviso to Rule 28 has been added effective 26/10/2023 to say that the value of corporate guarantee services will be 1% of the guaranteed amount or the actual consideration charged, so paid, whichever is higher. Is this clear? So if you have actually paid 2%, then 2% is the value. But if you have not paid anything, at least 1% will be the value. Is this clear? But now that brings us to a very important point. If the corporate guarantee was issued before 26 October 2023, this valuation rule will not apply at all. Which means the officer will now have to prove how 1% is the open market value. Because bank giving guarantee is completely different from corporate guarantee. Bank will give guarantee only when I give him a fixed deposit. Otherwise he will not give guarantee. So how can you compare a bank guarantee rate with a corporate guarantee rate? So they will have to tell me what is the open market value. I don't know. From 26th October 2023, you have given me a deemed value because I didn't know. That is fine. But before that, I didn't know the value. So you tell me. Second, that circular 199 said, if the recipient can claim the credit, then even if you give a zero invoice, that will be deemed to be open market value. So in all corporate guarantee cases where the recipient can claim the credit, I have raised zero invoice. Correct? No demand. Clear? Any doubts on this? Yes sir, please.
Now assuming that guarantee was given for some 200 crores, but the guarantee benefit is taken only for 20 crores.
Excellent point.
1% is to be on 200 crores or 20 crores?
Excellent point. You tell me in your balance sheet contingent liability, what are you reporting? Nothing. Contingent liability, sir, this is 20 crores you will be reporting. Then it has to be on 20 crores because up to 200 crores corporate guarantee agreement. It is up to 200 crores. But what can be enforced is only 20 crores for the time being. So it will be only on 20 crores. Whatever has been utilized, but you will have to look at the agreement. Is it a dynamic corporate guarantee agreement where it keeps on increasing depending on how loans you take, or there are multiple agreements which have been entered in?
What has happened is the parent company outside India, they have given a guarantee for 200 crores. In the financials, what is reported is what is utilized, saying that this much of debt has been taken, this has been guaranteed by the corporate.
But in your corporate guarantee agreement, does it say the guarantee is to the extent of 200 crores, which will be allocated to the extent of loan outstanding or something around it, to say that highest is 200 crores, but the guarantee amount will be only to the extent of loan which is being sanctioned. It should be there. If it is there, then you have a very good case to say I will have to pay tax only on 20 crores and not on the 200 crores. There are a lot of issues. Whether corporate guarantee is a supply liable to GST is the first question. Will recognition of capital corporate guarantee under Ind AS, because in Ind AS you will have to recognize this. Okay, will that trigger a liability? So I am saying it is not liable, but there is an entry in my books that I have to provide for corporate guarantee expense, which will never be paid. Only for Ind AS purposes I am accruing, and then I will reverse it once the guarantee is revoked. So whether based on this entry, there also proviso to rule 28 says actual consideration paid, not accounted. So I will be safeguarded from there. Okay. What is the time of supply? This issue is coming in 17-18 audits. 2015 loan was taken. Corporate guarantee also given in 2015, appearing in the balance sheet today. 2015 16 also appearing, 16-17 also it is appearing, 17-18 also it is appearing. Can the department say no, it is appearing today, so I will ask you to pay tax? And in 18-19 again the officer say it is appearing in this balance sheet, so I will ask you to pay tax. Corporate guarantee is given only once. The duration is 5 years. So time of supply, even if it is a supply, will be the date when it was issued. It cannot be on an annual limit. Right?
1% charge is one time or it's every year?
One time, according to it, because even they are equating it to bank guarantee. Bank guarantee is also given, the commission is charged only one time. Again, when you go for renewal, that time they will charge you again. So when you have taken a 100 crores loan, which has a duration of 5 years, you again get a reclaim, or you ask for a limit again for 500 crores. Again, you have to execute a corporate guarantee. That is second time. So there again you will pay 1%, but not annually you will pay.
This amendment is a prospective, that's what you have.
This amendment is prospective only, not retrospective. So these are the few questions, like one of the questions which you had asked, if loans are disbursed in installment, similar to your case, 20 crores over 10 times, then will I have to pay on the 200 crores in first shot itself, or 20 crores I have to keep paying. So that depends on the terms of the agreement actually. Right? Okay. What if the loan was not disbursed in full value as per the agreement? So as per agreement is 200, but I have applied for only 100. So then corporate guarantee should apply only 100 and not on the value which is 200 crores. Will liability arise again when the subsidiary takes up a top-up loan? If it is within that limit, then no need to. But if a fresh corporate guarantee is given, then I am required to pay tax again. And working capital loans are renewed. Whenever renewal happens, and unfortunately the working capital renewal happens within a period of 15 months. Okay, no, not 3 years or 5 years. 12 to 15 months period. Every time there is a renewal, they will have to pay a tax because it's a fresh agreement which you entered into with the bank. Right? What if there is a change in terms of condition? You already, the time of supply has already occurred, you already paid the tax. If there is any enhancement, you will have to pay again. If there is any decrease, you cannot claim for refund. Right? Yes, please. Yes, ma'am. Sorry, the guarantee is within is 12 months. Service has been, if you believe that there is a service has been given. Correct? If you believe there is a service has been given on the first day. Whether you utilize it or not, you will have to pay tax on it.
Will I get any benefit of the GST percentage? That 1% is for tax rate. So partial.
I don't have the answer now. I can only correlate it to insurance. Okay? I have taken a 1 year insurance. Service has been supplied. Now you don't use it for 6 months because of a dispute with the insurance company. Still it is a service which has a duration of 1 year. But service has been issued. Whether credit note can be issued or not. Will bank issue credit note? My only counter question to that will be, well, can bank issue credit note for bank guarantee? No. This also will be difficult. Right now I don't have an answer. I'll just do some research and maybe get back to you. Clear? One more topic. I have one small topic. There are
one thing about the letter of comfort given instead of the corporate letter of comfort.
Letter of comfort is completely different. In fact, there are a lot of papers which when I was doing research, letter of comfort is completely different. It is not even in line with corporate guarantee. So, on letter of comfort, which is an inferior version of corporate guarantee, there should be no tax implication at all. Good point, sir. Last topic. There are 2-3 topics, but if you allow me to, otherwise last topic we are going to discuss. Okay. So now, these are the due dates which in which show cause notice or orders have to be passed. If it is state, they are going under section 73. If it is central, they are going under section 74. As of now, section 74 due dates have not been extended. But if you look at 1819 and 1920, because they were not able to complete the assessments, 1 month extension was given to them. Correct? The original due date was 31st December 2024, 31st December 2023 for 1819 for issuance of show cause notice. That has been extended to 31st January 2024. Likewise, order also was given 1 month time. Similarly, for 1920 also, what was the due date was 30th April, extended to 31st of May 2024. Right? So 1 month was given for issuance of show cause notice as well as order. Okay. This extension order for extending the due dates was issued under Section 168A. Section 168A says government has got powers to issue notification for extension of dates relating to action which the officers had to take only in a case where there is force majeure, right? And they have defined also what is force majeure, right? Which talks about natural calamity, COVID related matters, pandemic and all those things. But if they are not able to pass the orders within the due date, that cannot be a calamity, natural calamity. They are not issuing is a the issuing is a calamity. The not issuing is not a calamity. So lot of writ petitions have been filed, including Punjab and Haryana High Court, including I think Madras High Court, where they have said you have extended the due date by 1 month, and earlier also you had extended using Section 168A. But after COVID extensions, can you actually use Section 168A for extending the due dates for your own incompetence of not being able to issue show cause notice or orders within the time, right? And stay has been granted. The judgments have not come, stay has been granted. But if that comes in our favor, then all the show cause notices which have been issued beyond the extended dates, all of these will become null and void. Clear? This is what I had. I have few more issues, but I would want to see if you can ask if there are any questions on whatever I have covered till now. And anyways, the PPT will be shared with you. So I had one hostel and PG, one recent judgment of Madras High Court which I wanted to discuss, and then few other small issues. Yeah, Ashok.
So, officers are issuing notice for 3 years together in one single. What is the due date
for 17-18, it will be the 17-18 due date.
Everything compiled in one single notice.
No, that's fine. So as long as it is within the due date which is applicable for 17-18, that is still a valid notice. In one of the cases, which was before, I don't know which court, okay, I can send you the judgment also. After the 17-18 due date, a combined notice was sent for 17-18, 18-19, 19-20, where the court said you cannot bunch all the show cause notices together where the due date for one of the portion has already expired. But if it is well within the due date of 17-18 and they are issued for 4 years, 5 years, like center audit, they will issue notice under 74 only. They issued notice ADT01 for 3 years, then extend to 4, 5, now 6 years already they are doing together. As long as they are able to issue it by before 7th August 2024 for all the 6 years put together, it will still be treated as a valid show cause notice.
Date of order?
Date of order should be, if it is 74, 7th February 2025. See, if it is 74, they have 6 months time between show cause notice and order. If it is 73, they have 3 months time between show cause notice and order.
For all the 3 years?
See, there also they can pass an order, even though there is a single show cause notice, they can pass an order only for 17-18 and another order for 18-19, 19-20. Right? Anything else?
On this point of cross empowerment, you say that there is a proceeding by state, simply cannot initiate same proceedings.
No, that is not cross empowerment. That is separate section altogether. 6(2)(b).
Now, let's say the issue of 2A versus 3B, a notice was issued by state authorities.
And you are under state only.
I am in state only. And they have concluded the matter. Matter is concluded, ASMD 12 dropped. Now center raises the same issue 2A versus 3B, saying it is not in process. It is concluded. Hence I can reach.
In fact, for this, yesterday or the day before yesterday, there was a judgment which was issued that one said, yours is state versus center, that you have a judgment today of Madras High Court that if I am a state jurisdictional assessee, center cannot initiate at all. There, ASMT 12 was issued, another officer issued show cause notice on the same matter in the state. The High Court said not impossible. Once the matter is concluded, it is concluded. Now you cannot reopen that matter. So in fact you are on a better footing. Two grounds you can give. One, center cannot issue notice only. Second, once the matter is concluded, you cannot ask me for the same issue again.
We are on the point that the section says if the proceedings are initiated.
Yeah, only if it is initiated, it is concluded. No. To answer in their own language, only if it is initiated, it is concluded. So it is initiated. That's all. It does not say initiated and not concluded. Initiated. No. Okay, then. In their own language, we have to do it. Anything else? We can go on.
So,
Sorry? PG.
Yes.
Okay. I want 5 minutes of yours. Okay. Total in PG. I'll give my phone number. You can. Right. Okay. Notification 12 of 2017 gave a specific exemption to say services by way of renting of residential dwelling not liable to GST. There was another entry for hotel accommodation which says if your accommodation is rupees 1000 per day, less than up to 1000 rupees per day per unit of accommodation, then you are not required to pay GST even if it is hotels. Okay, but that entry unfortunately has been removed from 18/7/2022. So even if hotel charges 750 rupees, they have to pay tax rate of 12%. Okay. So these were the two notifications based on which PGs and hostels were not paying tax. Saying first it is residential accommodation, and second, even if it is not a residential accommodation, I am collecting 20,000 rupees. 20,000 divided by 30 is less than 1,000 rupees. So I am covered under accommodation entry also of hotels. Okay. But the department was not accepting that argument. Then an advance ruling application was filed by Mr. Amrish. Okay. His surname is first, unfortunately, and his name is next. Okay. Mr. Amrish from Karnataka only had filed a advance ruling which went against him that on PGs you are required to pay tax. Okay. Then he filed an application before AAAR. He filed an appeal before the AAAR. That also was against him. So he went to Karnataka High Court and said, I am giving PGs on rent which are equivalent to houses, which are equivalent to residential dwelling, because end of the day it is a residential dwelling only. Okay, and hence it is liable to tax. It is exempt from tax based on first entry. Okay, Karnataka High Court accepted that argument, but unfortunately this matter went to Supreme Court because department filed the appeal. In the month of February, the arguments of both Mr. Arvind Datar from taxpayer side and N. Venkatraman from department side have got concluded. If you see the status of the judgment today, it is reserved for judgment. So as of now, the judgment has not been pronounced. Okay. Incidentally, beautiful judgment of Madras High Court again in Thai Mukambika Ladies Hostel. Okay, where the argument of the department was beautiful. Okay, they said renting of residential dwelling is exempt from tax. In a PG, house means there are multiple rooms. One is a room to sleep, one is a room to watch TV, one is the room for cooking, one is the room for bathing. But as far as PG is concerned, there is only a single room with a bed which is given and everything is a common facility. That means it is not a residential dwelling. And so exemption is not available because it does not, that single room cannot qualify to be a residential dwelling. Amazing argument, no? Okay, you know what High Court said? People who are living on the streets, their residence is that road. Unfortunately, the residence is the road. All of them can collectively be cooking the food, or all of them can collectively be using washroom somewhere in a dedicated space. But that also qualifies to be a residence. That footpath is a residence. In case of students, working women and working professionals who have come away from their house, this is their residence. And so exemption has to be granted. Wonderful judgment, around 40-50 pages. Please read that. They have connected it with Tenancy Act, they have connected with Stamp Act, with lot of masala they have added, and then come to a conclusion that the notification should not be read strictly. It has to be read to ensure that the objective of the notification is met or the exemption is met. Right? Okay. One other issue, I just ignore that. These are my contact details. At any point of time, you can call me or WhatsApp me. I'll be more than happy to respond to all your queries. Thank you very much for your patient listening. It was a pleasure speaking with you. Thank you.
It is indeed enriching session. You can see the chairs full yet. So, and they still wanted you to talk. So that shows that it was an enriching session. So thank you, Hanish, for taking your time out and then doing this session for our members. I request our chairman to hand over to Raghunathan. Can we have a big round of applause to the speaker, please? Members, thank you for your active participation. Any program will be successful only once you participate. Thank you for your active participation. Good night.